What's up guys, Bill here. In this video I'm going to talk about how I trade intraday reversals on SPY using Oliver Kell's cycles of price action. I previously made a video about the cycles of price action, looking at it from a daily time frame, talking about where to take good swing entries and things like that. But the great thing about this strategy is it is applicable to all different time frames. So I'm going to specifically focus on day trading today using the 5-minute time frame. If you haven't seen that video, I'll link it at the end of this one, and you may want to watch that first because that's where I detail what the cycles of price action are and how to identify them. In this video, I'm just going to be following up and showing some examples of how you can day trade instead of swing trade with this focus. All right. So one thing I want to talk about with day trading before I start to even look or get excited about a potential cycle of price action, a new one, is I want to see a pretty long trending move on SPY, okay? What does that mean? Well, yeah, it's a little relative, right? Depending on SPY's average range at that time. The range on SPY has been bigger the last couple months as VIX has been more elevated. So right now I'm looking for like at least $3 to $4 legs down, trending moves down like this. If you start to take trades and look for this process after just $1 or $2 legs, a lot of times what's going to happen is what happened on the day before, where you get into a chop fest here. And it's just a couple dollars down, couple dollars up, couple dollars down, couple dollars up. And by the time you start to think, okay, maybe we're going to reverse and you get the EMA cross back, it's just not as reliable. You're in a tight range and you get a lot of chop. Just look at how the candles are constantly regaining and losing the EMAs over and over. That is not what we want, okay? We want to see a nice trend like on this day where the EMAs are very well respected and then things start to turn around, okay? So first we're looking for, on this downside move, that reversal extension, which is usually a bigger candle on bigger volume, but it's not always. But there's usually some type of volume price analysis indication that maybe there's a bottom in. So in this example, we see this reversal extension candle on big volume down here. And the next candle is on almost as equal volume, but it's green and pushing back up. This is volume price analysis indication that there's probably a reversal coming. But I don't just usually take a trade off that. I like these price action cycles because they give you a couple steps that need to happen to build your conviction. Okay, so here's our reversal extension. Then we get the wedge pop. So wedge pop is that trend line break that we get back here. And then we're looking for the EMA crossback with your 9 crosses back over your 20. And at this point, this is where we're looking to enter, okay, on any pullback into these EMAs. So you could buy anywhere right here, and you can see that we get a nice move up. Originally, we pull back, we hold it again, and then boom, big stick. Now, this is a little bit of a weird day because I believe there was like FOMC minutes or something like that that caused some volatility at the end of the day. But I'll show you a bunch of other examples that are maybe a little cleaner. But basically, when I take this trade on the 5-minute, my risk would be any close back below the EMAs. So if we had come and popped and then dropped down here and closed, I'd have been out. Okay. Another thing I like about the strategy is when you're getting in so close to your risk, usually you're not going to take a big loss. Like, yeah, you could catch a candle like this to the other side and that would be unfortunate. But that's an outlier sort of thing, not common, right? Common is more like these type of candles, right? Not boom, boom, boom. And I believe this was FOMC minutes or something like that caused that volatility. All right. So let's talk about some other examples here. It works both ways, right? You can use this to go short or long. That was a long example. Here's a nice short example. So we get this big leg up with a 504. It's about $5. So that's great. That's, I don't want to trade dollars. I'm not going to really take this crossover because of just this $2 move down. I see this big leg. All right. And then I start to see some volume price analysis stuff. Gravestone doji candle on a little bit of volume. They try to recover it, but it's on way less volume. And then we get the wedge drop candle. So you can just imagine a trend line, very steep here. This breaks down through it, wedge drop. We start to lose the EMAs. The 9 crosses back under the 20, and now you're entering anywhere in here, right? And you get a really nice sell-off with good respect of the EMAs all the way down here to low a day. And you know, when you're managing your position, obviously scaling the targets, anything intraday that you like, any major targets you had going both ways, you can use fibs. You could draw a fib from here to here and hit targets on the way down. And then with runners, usually I'll try to hold them until either a break-even stop is hit or we finally close a candle back over the EMAs. So right there, okay? Let's look at some more examples here. Is the 19th. Here's an example where you would lose, all right? So pretty nice leg down here. Not the totally best respected. We cross back over there, but pretty well respected. Comes back down, and it's a long enough range here, about $5 range, and we get our wedge pop. Again, it's not the greatest wedge pop, so this might be, these are things that might be leading to it not being as reliable. There's also no major obvious volume price analysis stuff. We do get this big candle down on a little bit of volume pop. Maybe that's your reversal extension, but nothing down here is screaming reversal to me, except maybe this really low volume red candle and then followed by a bigger volume push up bullish engulfing candle here. You can make that argument that this is saying, okay, yeah, price is probably going to reverse here. So anyway, we get the cross back over, and where you'd be entering is right around here, and you'd immediately be stopped out. But like I mentioned earlier, one nice thing about this strategy is most of the time you're not going to take a huge loss on it, right? You can see here, what is it? We're about 40 cents away from the EMAs when we close. That's nothing, right? When these work really well, you can catch several dollar moves on them. So a 40, 50 cent loss is totally acceptable. No setups those 2 days. Here's a good one. All right, so we got a nice leg down. Pretty good respect to the EMAs here. We can see that we get this big rejection on volume, potential reversal candle here. We get some doji action. Now, see how this candle has almost equal volume to the big sell candle, but it's compressed in nearly less than half its size. That's a pretty good indication that we're about to reverse, right? But again, I don't want to just buy right here. I want to see a couple more things work to give me more confidence. So we have that wedge pop here. Just imagine the trend line, down trend line, breaking back over it. And we get the cross. And you can enter. Now this one, to be honest, maybe I would have missed it because we never quite came back into the EMAs, okay? By the time it crosses, you're a little extended. It does get a nice move, but I might not have been able to catch that one, right? I usually like to see it come right back in and touch at least the 9. If not, maybe sit right in the middle. And on really good trades like this, you get the base and breaks too. So once you get the 9 EMA crossing back over, you can get a move like this, come back, base a little bit, and get a leg higher. This did not happen that day. We just got one leg before this candle would have stopped us out, pulling back down under and closing under the EMAs. And then last example here, this one is a little interesting because I kind of consider that the move started in pre-market, right? So because of this flush down, I think there was, like a news catalyst or something, some type of data drop this morning in pre-market that led for a nice sell-off of about $6. For about 2/3 of it happening in pre-market and the rest happening once the market opened. But then we get a little bit of a hammer candle here and what you could kind of constitute as the wedge pop, but no EMA crossback, right? So that's the part of this process. If you only get 1 or 2 aspects of it, but not the whole completion of the cycle change, then you don't get in. So you get kind of a wedge pop there, but no change. And then we lose the EMAs. And then there's another attempt at a wedge pop here, a really tight one on volume. that finally initiates that crossback of the EMAs, and this is where you would get in. And this is a good example where you can get a couple little legs. So if you're in here, you're riding these EMAs nice, it kind of bases back in, pops again, bases back in, pops again, bases back in. Now we're testing the 20, pops again, bases, and then finally you lose. Okay, so that's a bunch of examples, guys. These have been working really well. You just got to be patient, and like I said earlier, you want to look for days where there's nice long trends down. If you start trying to play it every dollar move in every direction, you're going to get chopped up. It's just not that type of setup. So it's better on days where there's been a large move, either to the upside or downside, and things look like they're maybe starting to top. You look for those extensions and exhaustions using your volume profile analysis. You look for that wedge pop, that crossback, and then you take your entry on the first touch of those EMAs. All right, ride it as long as you can until you lose those EMAs scaling at your targets. And as soon as you get that cross back under in a 5-minute close, that invalidates the setup, and that's where you would stop out. All right, hopefully that helps. If you have any questions, just leave a comment or find me on Twitter, send me a message, I'll help you out.